Hi all, welcome to the first tutorial session of Commerce Guruji. As this is the first video, let's begin with the basics of accounting. In this video, I'll be explaining you all what is accounting, why it is necessary, what are the accounting processes to get the clarity of a business as a whole, journal entries and golden principles of accounting. Let's start. I have read many accounting books and most of the accounting books starts with the meaning of accounting. What I have observed is that there are similar words in different books. They are recording, classifying and summarizing the business transactions. But no books explains this word. Recording. It is all the business transactions of financial characters would be recorded. Classifying. It is concerned with the grouping of transactions of a similar nature under one head of account. Summarizing. Presenting the classified data in an understandable and useful manner for the internal and external users. Internal users uses journal entries, ledger accounts, trial balance, etc. And the external users uses income statement, that is profit and loss account, balance sheet, cash flow statement, fact sheet, etc. Altogether, it is systematically the financial transactions of a business would be recorded. Just to talk about what is the need of accounting, first of all, as I said earlier, to keep the systematic record of accounts, accounting is necessary, and each business would earn either profit or loss at the end of each financial year. To ascertain the profitability, and each and every business would have its own assets, liabilities and owner's equity, and it is important for the business to ascertain the value of it. As per the government and as per the law, a business should file its accounts. For this reason, accounting is necessary. To move on, accounting process. This is the process which helps to get the clear picture of financials. That means the steps involved in preparing the financial statements, which starts with collecting the business transactions, and these business transactions would be posted to journals. Then on the basis of journal entries, the ledger account would be prepared. On the basis of ledger account balance, the trial balance would be prepared. If in case any adjustment comes into picture, then the adjustment entries should be passed, and as per the adjustment entries, the adjusted trial balance would be prepared. Once the trial balance is prepared, then the trading and profit and loss account, that is income statement, balance sheet, cash flow statement would be prepared. Today, we will look at only till journal. Firstly, collection of business transactions, where we collect all the monetary transactions, because monetary transactions has effect on both assets and liabilities. Once we collect the financial transactions, then it should be posted to journal. Basically, journal gives clear picture on what comes from where and what goes and where. That is nothing but the income and expenses. And journal entries would be in the chronological order, meaning date-wise. The big limitation of journal is that it is a tedious process, meaning it takes lot of time to prepare, and all the transactions becomes bulky, and it won't help the owner to know the cash balance, bank balance, credit balance, total sales, total purchases, etc. The big advantages of journal are it becomes chronological order, where a person can search business transactions easily, and it helps in understanding the double entry system. About double entry system, we will definitely look at in the future video, and it helps in checking, that is verifying the error. To pass the transactions to journal entries, we should know the golden principles of accounting. There are three types of account. First one is personal account, which deals with the person with whom a concern carries business. It deals with both natural persons and artificial persons. Natural persons like Richard's account, Harris account, Joseph's account, etc. and artificial persons like companies, government institutions, colleges, schools, etc. Here the rule is debit the receiver and credit the giver. The second type of account is real account. Here the account of properties, things or assets owned by a concern and in and with which business is carried on would be taken care. Here the tangible assets and intangible assets comes into picture. The tangible assets are those which are having physical existence, where we can touch and feel, like cash, furniture, building, machineries, etc. And intangible assets are those which are having no physical existence, only we can see them. For example, copyrights, trademarks, softwares, etc. Here the rule is debit what comes in and credit what goes out. The third type of account is nominal account, where the account of income and expenses would be taken care. Here the rule is debit all the expenses and losses and credit all the incomes and gains. At the end of each journal entries, we should write the narration. Narration is nothing but the explanation of the transactions. That's all in this video. Hope you found it informative. See you all in the next video of Commerce Guru.
Commerce Guruji, the best platform towards knowledge. Like, share, and subscribe. Commerce Guruji, towards knowledge.